welcome to the Mortgage Minute. The title of this Mortgage Minute is going to be The Perfect Storm. And what I'm referring to is there are 5 factors that are going to impact both the investment market and the real estate market over the upcoming months. And that is the fact that we have rates on the rise. Rates have gone up in Canada. There's going to be new mortgage rules coming in on November 1st. We've got potential for tax reform. The economy is still not picking up as much as most people would expect it. And with the rise in rates, we've had a rising dollar. The Loonie's going to play an impact. And with all that, you've got the seasonal cycle of real estate in itself. So let's start with, well, right there, a perfect storm is brewing in the housing market. This is one page that kind of has it all, says it all. Right down here, let's start with the new mortgage rules here. OSFI's going to come in with new mortgage rules and talks about the rate hikes that are in the offering here. But let's start with interest rates. You know, the Bank of Canada came out and had the announcement over the summer that they're going to raise rates, and of course they did. And we've seen 2 consecutive interest rates. So one of the big questions here is, here's an article that says, how far does the Bank of Canada have to go to increase interest rates? So a lot of people are going to ask me, okay, now that interest rates have gone up, does this mean we should lock in and fix our rate, or should we stay with the variable? Remember, when you took a variable in the first place, you took that because it was going to save you money at a lower interest rate. Ideally, what you did is paid a little bit extra, and you earned some benefit of reducing the principal balance on your mortgage. Well, now that rate is creeping up. So here's the rule of thumb I have. If your opportunity to look at locking in is less than half a point, so in other words, if you have 2.7 on your variable rate, but you're offered 3.1 on a fix, then take the fixed rate, lock it in, because there should be probably there's room for 2 more rate increases down the road. But if the savings between fixed and variable is more than half a point, then keep floating and keep paying down that mortgage. In the meantime, when we look at those interest rates, or look at the Bank of Canada rising the interest rates, they have a dilemma, because with that comes the loonie. The Canadian dollar has gone up, and what this does, it hurts export business. So any Canadian companies that are dependent on exports, and that's a lot of them, we're a resource-based country, that means a rising loonie, a rising dollar, hurts the export sector, which means the Bank of Canada is caught between a rock and a hard place. They want to slow down what they would consider inflation, although I'd argue the economy's not doing that great. Just ask anybody in Alberta. We still see recessionary trends in markets like Alberta. So at the risk of trying to slow down in what they perceive to be an inflationary market, they end up causing the loonie to go up, which hurts the export market, which hurts the economy. So it's they're treading a thin line there. So because of that, I do not expect to see more interest rates going up further in the upcoming time frame. Now, in the meantime, the consumer psyche is you've got rates on the rise, you've got a full half a point increase in the prime, the fixed rates have gone up, and now on top of all that, Canada is going to come out with new mortgage rule changes. I don't know if you're aware of this, and everybody's aware of this or not, but as of October 31st, OSFI, which is the Office of Superintendent of Financial Institutions, it's a mouthful, they came out with this whole proposal called the B20 guidelines. Well, those are set to take effect as of November 1st, which there's a variety of different rules, but the most important one for everybody is that to qualify for a mortgage, they're going to have to qualify it at 2 points higher. Now, I'm not going to go into all the different mortgage rule changes, but here's an article that's basically saying these mortgage rule changes are going to have an impact and potentially slow down the housing market. So you start combining this. You've got new mortgage rules, interest rates going up, and oh, look, some tax reform in the works. So there's a proposal for the Liberal government to get into some tax reform. I'm not going to get political here. You know, there was a whole page advertisement saying tax changes will crush the dreams of Canadian entrepreneurs. Now, whether you believe that's true or not, it's more of a consumer psyche thing is what I'm trying to get at. And here's Morneau saying a couple of weeks ago that he's going to forge forward with his tax reforms. So, you know, when you get all this, again, I'm just looking at the list here. Rates on the rise, new mortgage rules coming into effect, tax reform, a rising dollar, stress and strain on the economy. All these is what I refer to as the perfect storm. My prediction is that we're going to see a lull in the upcoming months. And it's funny, when you see headlines, this is just a classic example of be careful what headlines you read. Here's one from August that says national housing prices slip as Toronto house sales slide. And then, you know, about less than a month later, home sales gain ground in September in Toronto. And then October, Toronto home prices set to normalize. Well, what does that tell you? What happens in August, rather? August, people go on holidays. So remember, the fifth component of this is the cyclical nature of real estate. People go on holidays in the summertime, so guess what? There's less activity. That results in lower prices. Oh, the headlines, prices are down. Guess what? People come back to school. There's more activity by September and October. Guess what happens? House sales back to normal. It's a little predictable. And as Jon Snow would say, for all you Game of Thrones fans out there, winter is coming. So what does that mean? It means we're going to have another slowdown in the housing market as we move into December, January, and February. So when you combine all these factors, it's the perfect storm for a slowdown in the real estate market. Rising rates, mortgage rule changes, tax reform, rising loonie, and the winter is coming. So with all that, it's going to make for an interesting winter for prices, activity. Be strategic, and for those of you looking for alternative investments outside of real estate, you might want to consider putting money into a mortgage investment corporation, a mortgage fund, if you will. And my next webinar is going to be with Chess Hagen from AP Capital, a mortgage investment corporation. So stay tuned for more information on that. In the meantime, have a fantastic week. That's the Mortgage Minute. Thank you very much.